G'day, guys. Still hanging out in Mildura, or just another day today, and then back home tomorrow. You know that feeling when you're grabbing a latte, you check your phone, and Bitcoin's taken another leg down. Yeah, that's been February 2026 so far. No sugarcoating it. Bitcoin's trading at approximately 97,000 Australian dollars, 68,500 USD right now, down sharply from those euphoric highs above 190,000 AUD or 126 USD late last year. And if you're a Aussie holder, it hurts, especially with the AUD getting hit too. But here's the thing: while the charts look brutal, the story on the ground, especially here in Australia, has some surprising green shoots. Stick around, because today we're going deep on why this crash is happening, what it means for us down under, and where it might head next. This segment is brought to you by CRYPTOLOGIC.com.au, your go to hub for in depth Aussie and global crypto news. First up, the local hook for us Aussies. Despite the bloodbath in prices, self managed super funds, our famous SMSFs, are leaning harder into crypto. Fresh reports show a new wave of adoption fueled by clearer regulations from ASIC and the growing availability of spot Bitcoin ETFs here. More Aussies are allocating through super because it's tax efficient and feels less Wild West now. But with Bitcoin down nearly 20% year to date and 45% off peaks, those portfolios are feeling the heat. It's a tale of two cities: long term conviction meeting short term pain. If you're in an SMSF, dipping toes in, timing and diversification matter more than ever. Now, let's zoom out to the global picture, because this isn't just a local dip. Global news one: the big driver, forced deleveraging. After the massive 2025 rally on Trump hype and ETF inflows, over leveraged positions got wrecked. We've seen cascading liquidations, ETF outflows in the billions recently, and trading volumes drying up. Coinbase just posted a surprise loss because of it. Bitcoin briefly tagged below 100,000 AUD, 66,000 USD, lows not seen since late 2024. No full blown panic like 2022 crypto winter yet. ETF flows are down but not catastrophic, but sentiment is fragile. Global news number two: institutional divergence. NYDIG data shows US institutions holding their leveraged BTC positions steady, betting on long term recovery. Offshore traders, they're cutting exposure fast. It's creating this weird split where Wall Street stays relatively bullish while the rest of the world hits the exits. Global news number 3, forecast downgrades and macro pressures. Banks like Standard Chartered slashed their 2026 Bitcoin target from 150,000 USD to 100,000 USD, even warning of a possible dip towards 75,000 AUD, which is 50,000 USD, before rebound. Add in broader market wobbles, AI trade cooling, tech stocks shaky, and crypto is getting dragged along. Okay, time for a quick breather. Here's your daily CRYPTOLOGIC joke. Why did the Bitcoin go to therapy in Melbourne? It had too many AUD identity issues after crashing harder than a tram on Burke Street. All right, back to business now. Let's get analytical. This looked like orderly deleveraging, not capitulation. On-chain data, though simplified here, shows long-term hodlers, long-term holders not dumping on mass yet. Market dominance for BTC is ticking up as alts bleed harder. Macro-wise, if US liquidity improves or Trump-era policies deliver real wins, we could see a base form here. But near-term risks, more ETF outflows or a bad macro print could test those lower levels. For Aussies, watch the AUD USD pair too. A weaker dollar amplifies our local BTC pain. Time for the crypto logic takeaway. This dip is painful, no doubt, but it's exposing weak hands while strong ones accumulate quietly. Australia's regulatory clarity and SMSF/ETF momentum give us a relative edge for adoption long term. Zoom out, Bitcoin survived worse, and cycles show recovery follows pain. That said, I'm not a financial advisor. This is just my read as Sash from CryptoLogic. Always do your own research, manage risks, and never invest what you can't afford to lose. If this hit home, smash that like button, subscribe for more Melbourne based crypto truth bombs, and drop in the comments. Are you buying this dip, hodling through it, or waiting on the sidelines? I know what I'm doing. Until next time, stay sharp out there, and remember, in crypto, as in Melbourne weather, it can change fast. Catch you in the blockchain.